You are about to lose access to your money, not because of a bank failure, not because of a market crash, but because your government will simply decide what you're allowed to spend it on. Sounds impossible? China already did it. Nigeria tried and created chaos. The European Central Bank is building it right now, and the United States, despite the resistance, has the entire architecture mapped out and ready. It's called a Central Bank Digital Currency, a CBDC. And if you think it's just a digital version of the dollar in your bank account, you've already fallen for the trap, because this isn't money, it's a remote control with an off switch. In this video, I'm going to show you something most people still don't understand, even though it's already being deployed in over 130 countries. First, what CBDCs actually are, and how they're completely different from the digital money you use today. Second, the real reasons governments want them, not the official story about financial inclusion, the mechanisms of control they publicly admit to, but frame as benefits. Third, what's already happened in countries that launched them, Nigeria's cash crisis, China's expiring money, the patterns repeating, and fourth, what this means for you, not in theory, in practice, where your savings, your spending, and your financial privacy stand in the next phase of the monetary system. This is not financial advice. This is pattern recognition, and the pattern is clear to anyone willing to look at what governments are actually building, not what they're promising. Let me take you to Nigeria, February 2023. Imagine you wake up one morning and your cash is worthless, not because of inflation, because your central bank just announced that all the old currency notes are invalid. You have 2 weeks to exchange them for new ones or digital money, but there's a problem. The banks don't have enough new notes. The ATMs are empty. You stand in line for 6 hours. You watch people panic. You see riots starting. This wasn't a natural disaster. This was policy. The Central Bank of Nigeria had launched the eNaira, their CBDC, a year earlier. Almost nobody used it. Less than 0.5% adoption. The people didn't want it. They wanted cash. So the central bank did something extraordinary. They engineered a cash shortage. They withdrew physical currency from circulation. They created chaos. And the governor himself stated his destination was a 100% cashless economy. Not most, not mainly, 100%. This wasn't incompetence. It was leverage. Create the problem, offer the solution. The solution just happens to be a monetary system where every transaction you make is visible, traceable, and controllable. That's the blueprint. And it's not a conspiracy theory when the central bank governor says it out loud. Here's what you need to understand. The money in your bank account right now, that's already digital, but it's not a CBDC. When you have money in Chase or Bank of America, that bank owes you that money. It's a liability on their balance sheet. The bank uses that money to make loans to invest. If the bank fails, your money is at risk. That's why we have FDIC insurance. A CBDC is completely different. It's a direct liability of the central bank. You don't hold a claim on a private bank. You hold a claim on the Federal Reserve itself, or the European Central Bank, or the People's Bank of China. Think of it like this. Cash is anonymous central bank money. Your bank account is private bank money. A CBDC is digital central bank money with a record of every transaction. That might sound like a small technical difference. It's not. Because when money becomes a direct instrument of the central bank and every transaction is recorded on a government ledger, that money can be programmed. It can have rules. It can have conditions. An IMF official named Bo Lee said this explicitly. CBDCs allow money to be precisely targeted for what people can own and what kind of use this money can be utilized. Read that again. Precisely targeted. What you can own, what you can do. And Agustín Carstens, the head of the Bank for International Settlements, the central bank of central banks, said this. With a CBDC, the central bank will have absolute control on the rules and regulations that will determine the use of that expression of central bank liability, and we will have the technology to enforce that. Absolute control. Technology to enforce. These aren't conspiracy theorists on YouTube. These are the people building the system, and they're telling you exactly what it does. Now, here's where it gets interesting, because when you read the official documents from the Federal Reserve, from the White House, from the European Central Bank, they don't talk about control. They talk about financial inclusion. They talk about faster payments. They talk about competing with China. They talk about protecting the dollar's global dominance. And some of that is true. Those are real concerns. The digital yuan is real. The risk of the dollar losing reserve currency status is real. Stablecoins and crypto creating parallel systems outside government control, that's real too. But watch what they build, not what they say. The European Central Bank promises privacy, but then explains that privacy will only apply to small transactions. Everything larger will be traceable. And they've prototyped anonymity vouchers, which sounds nice until you realize it means anonymity is a limited resource you're granted, not a right you have. The Federal Reserve says any digital dollar would need congressional international approval and would respect privacy. But they also say it needs to comply with anti-money laundering laws, which means identity verification, which means tracking. China doesn't even pretend. The digital yuan is openly designed for government visibility. Trials included money that expires, use it, or lose it. Reports of transactions being blocked based on unclear criteria, all fitting neatly into a social credit system where your financial behavior is just another data point in your citizen score. And here's the key pattern. Every government says their CBDC will have safeguards. Every government says they'll protect privacy. Every government says it won't replace cash. Then look at what Sweden is doing. Cash usage has dropped so low that many businesses don't accept it anymore. The infrastructure is being dismantled, and now they're exploring an e-krona. When cash disappears and the only alternative is a system where the government can see everything, that's not a choice. That's a cage with digital bars. So where does this stand in 2025? The United States has not launched a CBDC. The Federal Reserve is still in research mode. There's enormous political resistance. Republican lawmakers have introduced bills to ban retail CBDCs entirely. Some states have passed laws refusing to recognize them as money. But the architecture is ready, the research is done, the policy framework has been written, the technology exists, and the geopolitical pressure is building, because while America debates, the world is moving. Over 130 countries are exploring CBDCs. 11 have fully launched. China's digital yuan is in active use, with over $260 billion worth of transactions processed. The European Central Bank is in the preparation phase for a digital euro, with a decision expected in the next few years. And here's what changes the equation. Cross-border CBDCs, projects like mBridge, connecting China, Hong Kong, Thailand, UAE, and others, allowing direct CBDC transactions between countries. No dollars, no SWIFT, no American visibility. After Russia was cut off from SWIFT in 2022, the number of cross-border CBDC projects more than doubled. That's not a coincidence. Nations are building financial infrastructure that bypasses the dollar system, which means the United States faces a choice: stay out on principle and watch the dollar's dominance erode, or join in and deal with the massive domestic opposition. Right now, we're in a stalemate, but stalemates don't last forever, especially when crisis creates urgency. And let me be clear about something. This is bipartisan. The Biden administration explored it. The Trump administration, as of 2025, reportedly banned retail CBDC work, calling it monetary tyranny. But that can change with the next administration or the next crisis, because the infrastructure doesn't disappear, the research doesn't get deleted, the pressure doesn't vanish. All it takes is the right catalyst: a financial crisis, a cyber attack on the payment system, a fear campaign about crypto or fraud, and suddenly the same politicians who opposed CBDCs are voting for emergency measures that include them. We've seen this before. The Patriot Act, Bank Secrecy Act. Every expansion of surveillance power came with a crisis and a promise that it's temporary and limited. It never is. So who wins if CBDCs become the standard? Governments win. Absolute visibility into economic activity, perfect tax compliance because every transaction is recorded, ability to implement policy directly, want to do stimulus, deposit digital currency in every citizen's wallet instantly, want to impose capital controls, block certain transactions, want to punish dissent, freeze accounts without involving banks or courts. Central banks win. CBDCs give them tools, cash never allowed. Negative interest rates become enforceable because you can't pull your money out and hide it under the mattress. Money supply management becomes granular and programmable. Some tech companies win. Whoever builds the infrastructure, the wallets, the systems, there's profit in being the middleman of a mandatory system. And here's who loses. You lose privacy. Every purchase you make, visible. Every donation, tracked. Every financial decision, recorded. You lose autonomy. If your money can be programmed, you don't control it. You have permission to use it under conditions set by someone else. You lose alternatives. If cash disappears and CBDCs become mandatory, there's no exit. You can't opt out. You can't hold anonymous value. You're in the system or you're out of the economy. Dissidents lose, political activists, protesters, anyone who challenges power. Right now, you can fundraise with cash, with crypto, with methods the state can't easily block. In a CBDC system, that becomes trivial. Canada froze trucker protest bank accounts in 2022 with existing tools. Imagine how fast that happens when the central bank controls the wallets directly, and savers lose. Because CBDCs make financial repression easier. Negative rates, inflation, forced spending, all the tools governments use to manage debt and stimulate manipulate economies suddenly enforceable with precision. All right, so what does someone like you do with this information? First, understand where you're exposed. If all your money is in bank accounts, in the traditional system, in dollar-denominated assets, you're entirely within a system that's being upgraded to include more control. That's not automatically bad, but it's a concentration of risk. Second, diversify, not in theory, but in jurisdiction and type. Some physical assets, some cash, some gold or silver if you can store it securely, some Bitcoin if you understand the risks and technology, some assets outside your home country's direct control. Not all in on any of these. Diversification across systems, not just across stocks and bonds within the same system. Third, stay aware of policy changes. CBDC rollouts won't happen overnight with full features. They'll be incremental, voluntary at first, then encouraged, then necessary for certain benefits, then mandatory. Watch for the steps. Don't be the person who wakes up when it's already locked in. Fourth, consider what you're willing to accept. If a CBDC launches in your country with strong privacy protections, with cash still available, with clear legal limits on government access, maybe that's acceptable. But know what you're trading. Know what the system can do, even if they promise not to do it, because promises change, laws change, governments change, but the infrastructure lasts. Fifth, talk about this. Most people still don't know what a CBDC is. They hear digital dollar and think it's just a tech upgrade. They don't understand the difference between their bank app and a central bank wallet. Raising awareness creates political resistance, and political resistance is the only thing that slows this down. Not financial advice, not telling you to panic, but telling you to understand the board before the game is locked in. Now, if you're thinking this sounds like fear-mongering, like conspiracy theory, like doom content, I get it. But let me ask you this. Which part is conspiracy? Is it conspiracy that CBDCs exist? No. Over 130 countries openly building them. Is it conspiracy that they allow transaction monitoring? No. Central bankers admit this. It's documented in their own papers. Is it conspiracy that money can be programmed with conditions? No. The IMF official said it. The technology exists. China already tested expiring money. Is it conspiracy that governments freeze accounts? No. Canada did it in 2022. Nigeria created a cash crisis to force adoption. These are facts. The only question is whether you believe governments will use these powers responsibly, with restraint, only in emergencies, with proper oversight. History suggests otherwise. The Patriot Act was temporary. The Bank Secrecy Act had limited scope. The income tax was a small percentage on the wealthy. Surveillance was only for terrorists. And yet here we are. So even if you think I'm 50% wrong, even if you think the worst scenarios won't happen, the risk is still asymmetric, because if I'm right and you do nothing, you wake up in a system with no exit. If I'm wrong and you prepare, you have diversification and awareness that helps you anyway. Like, that's not fear, that's pattern recognition. The digital dollar trap isn't about technology. It's about what happens when money becomes software, and software has an administrator, and the administrator is the state. Cash is freedom because it's final, it's anonymous, it's peer-to-peer. It can't be programmed or monitored or shut off remotely. A CBDC is the opposite. It's conditional, it's monitored, it has an off switch. And once that system is in place, once cash is gone, once the alternative is gone, the trap closes. You're about to be offered an upgrade. Faster payments, more convenient, more secure, better for the economy, better for inclusion, and some of that will be true, but read the fine print, because the price is your financial privacy, your financial autonomy, and your ability to say no. This is the most important monetary shift since 1971, since the end of the gold standard, maybe since the creation of central banking itself. And most people will walk into it because they don't understand what they're giving up. Don't be most people. If you want to track this in real time, if you want to see the next steps as they happen, subscribe. This channel exists to connect the dots before they become obvious, and share this with anyone who thinks their money is safe because it's in a bank. Because it's not about safety, it's about control, and the trap is already being built.